Hi, my name's Tim Kirkham and welcome to the GPS Global Wallet podcast for Friday the 12th of May. Yesterday, the old lady of Threadneedle Street hardly raised an eyebrow as it increased benchmark rates by 0.25% to 4.5%. A majority of 7-2 was seen in favour of the rise, with the same doves voting to keep interest rates unchanged at 4.25%. The committee noted the underlying May monetary policy report, which saw interest rates peak at 4.75 but end the period at 3.5%. Interestingly, GDP is now expected to grow at 0.2% from Q3 onwards, and some risks do remain of a recession, which the committee were cognizant of. Also, they noted that the risk of a credit shock was a potential as interest rates rise, but they only saw a small impact to GDP. Energy prices, a bane for most of us, will reduce towards the end of June, and inflation is expected to fall sharply. The committee's model sees CPI inflation back to 1% in 2 to 3 years. So what are the numbers and what does it mean for sterling? So 2-year gilts, the level at which the government borrows money, is steady at 3.8%, while the 5-year remains stubbornly below 3.65%. Sterling is around 126 and trading like it's wading through treacle. Medium-term support there at 126.5 and resistance way down below at 122.80. Sterling euros had a good rally and we're in the realms of 115, but resistance is close by at 115.5 and support in the realms of 112. Please remember, we do have a wide variety of tools available on gpsfx.com to help all our treasurers. Thanks for listening to the GPS podcast.